Hello everyone, welcome to my YouTube channel. André Cardoso here. Thank you very much once again for being here, and for those who are following. Those who are here for the first time, I welcome you into this journey. I hope you take some useful information from my content here. My objective is to get you synced with those advanced pattern formations, variables and criterias. I hope somehow you take some useful information. Obviously, we will not be capable to fill that gap between some of us. I will not be capable to offer you the information that you are searching for, so you need to search for that using other source. So basically, I trade based on those advanced pattern formations and the price structure. Obviously, I tend to search for those advanced patterns on very specific price zones. And so I want to update some of the charts that I shared before with you. And well, let's start with the top of my list, as always, the cable, and I will try to cover a few other currency pairs and commodities, and also the crypto market. The cable has found some interesting resistance. This is basically a trend line or a potential. I draw it as a potential trend line resistance. This is kind of a weekly trend line resistance covering these previous lows. So the price has found some pressure there. This is also the monthly fractal, as I shared before with you. So we still, actually, we are rejecting that monthly fractal, but we're still threatening that fractal. So nothing assures the market will bounce and trade above that fractal. So if that happens, and I assume the market at some point may confirm that above that monthly fractal, that inverted edge and shoulders. So if that inverted edge and shoulders gets actually confirmed or validated above that monthly fractal, we may see the price trading even higher. So basically, we have a default projection for the inverted edge and shoulders, obviously taking into consideration those two levels, one right below that default target for the inverted edge and shoulders, the first pressure level above the previous highs. So basically, this is the golden Fibonacci extension of this swing low. So this is an extension of this swing low projected above. So usually it's a pressure Fibonacci level. So, and it completes also a sequence as a bearish shark pattern a few points below. And of course, the bearish shark pattern can also be pushed to the 224% Fibonacci extension level, but it's not the first time that we will see a reaction from the golden Fib, and then later the price finding again resistance at the 224% Fib, which may offer another retracement. So basically, we trade that retracement. So I expect some impulsive swing. So basically, we're still threatening, as I said, we're still threatening this bearish momentum, that structure for that bearish momentum. So as soon as the market violates that structure, I expect a violent momentum confirming this swing as an impulsive swing. So basically, I want to see the price then later finding some pressure and some resistance, and the market should start to fall, completing the sequence for the bearish shark pattern. So basically, if you draw a Fibonacci from the previous structural lows, a monthly fractal support, to the completion point of the pattern, then we will search for the 50% Fibonacci retracement, which is a huge fall expected for the shark pattern. So basically, we may see the cable trading above the previous structure highs from April, February, March 2018, actually April 2018, and then a retest of this previous structure again, the previous monthly resistance turned into a support, and then more upside down, more upside momentum. But we never know if that will happen. This is as always, as I used to say, this is pure speculation, taking into consideration one projection and one default expectation, if that projection tends to be the reality, you know. So if the price actually prints that pattern for us, we can expect that swing, that retracement. So, but even though we need to wait for that to happen, and on which circumstances the market will trade at those levels, in which market environment we will trade at those levels. Let's see, let's observe. For now, I want you to pay attention to what is happening at this trend line, which is an important trend line resistance in my point of view. If the market decides to reinforce that trend line, we may see even a deeper fall for the cable. But let's observe on a lower time frame. So on a daily time frame chart, we have also that bearish shark pattern printed to 24% Fibonacci extension level. I shared this before with you, I believe. Also, I believe I shared this also as a bearish bat pattern and the crab pattern projected at the same price zone. So we have kind of a confluence between different advanced patterns there. So we expect at some point that retracement. So we don't know the outcome for those patterns. We expect that to happen, and based on that, we can use the default projections for those patterns in order to identify our limits. As I used to say, we never enter the market to lose more than what we expect to win on a specific trade. So basically, if you enter the trade, let's say the first pattern the market completes at these highs, it was this crab pattern, and a few points above, obviously, the bearish bat pattern with a much better risk-reward entry point. So basically, let's use that bearish bat pattern completion point, which may offer a retracement back to the 38% fib initially. So we measure that same default projection. So this is my default. Let's go into a lower time frame. In fact, let's go into a 4 hours time frame. So let's see this. The entry point at 88% Fibonacci retracement level, default targets positioned at 38% fib. So this is a Fibonacci retracement from these previous lows to the 88% Fibonacci retracement level, the entry point. So what we see is the price trading against us as soon as we enter. So we enter the market enters into sideways moving process, new highs and new highs again. So basically, we need constantly to adjust these targets, but initially we need to measure our maximum risk for this trade. So basically, we trade to, let's say, 2.1% below our entry, so that forces to set our stops with a maximum of a 1-to-1 risk reward, let's say 2.1%. So, and this is the maximum risk reward approach that we should use, maximum. And obviously, we need to try to minimize our losses, because as soon as the price starts to trade against us, we need to adjust. As I said before, we need to adjust our targets, and as soon as you start to make adjustments, you lose your risk-reward ratio. You will lose more for sure. So basically, as soon as the market starts to trade against you, so let's take into consideration these previous highs here. So we need to adjust our Fibonacci levels and retracement level to those highs, and we expect the market to fall. The market starts to fall, and we expect, okay, we have a new target there. A small adjustment. We already lost a few points in terms of risk reward, as we can see, using a 1-to-1 risk reward approach. So as soon as the market starts to trade even higher, so we need to keep adjusting that default target. So which means the price today has found that 38% Fibonacci retracement level. Actually, we have a violation of that Fibonacci just moments ago. But so that being said, we have reached the default target for those patterns above, even extended a few points above, because we need to provide some room above, and specifically because we are trading a monthly fractal. So we don't expect the monthly fractal to be, let's say, respected as a 15 minutes or a 1 hour support. So basically that eventually the market will retest that monthly fractal again. We don't know. Actually, it's already retesting for a second time. So let's wait and see. But the point here, we need to provide some room above that monthly fractal resistance in this case, and we can try to minimize our losses in this specific trade. So I used to suggest kind of a 1-2 risk reward approach. So basically initially we started with a 2% reward possibility. So basically using a 1-2 risk reward approach, the market has actually traded a few points above that ratio, that 1-2 risk reward approach that I used to share. But of course, as I said before, if you are trading close or very close to that monthly fractal resistance, if you have patterns completing there, we need to provide some room above or below that fractal resistance or that fractal support. So let's move forward. So basically we are already approaching the 50% Fibonacci retracement level from these lows. And look at this. So 88.6 bearish bat pattern completed here. Initial targets already achieved. So if you draw a Fibonacci retracement here, your entry points, default targets, initial targets, threatening the starting point of the pattern there, new high above your entry. The pattern is still valid because it needs to trade above and confirm that it will stay there above that starting point. So basically the same methodology applied there. We need to adjust and to keep adjusting our reward for that trade, and at some point the market has found some support at that 38% Fibonacci retracement level, as we can see. Then with a false breakout below these lows, so we have one first low here, oversold for sure, market oversold both on MACD and on actually I don't search for oversold conditions on MACD, of course, but we have both MACD and RSI offering you divergence, and the second low at the 38% Fibonacci as a potential false violation of the previous low. So, and let's stay focused on this process here. So at some point the market has found support, a bounce and new lows. So what we do expect for a trend continuation, at some point the market will develop or will create structure and will keep falling inside that structure, or in a form of a channel or a wedge, whatever the market needs to form, the market will keep trading in that specific direction. So at some point the market needs to confirm that. So we have limits, we have these previous structure highs, and the market needs to respect that and needs to keep trading below the previous structure lows, or even if the price needs to violate that structure, that previous structure resistance, similar as what happens here, the market then needs to recover the structure and the trend and keep trading in that direction. So if the market fails, so indeed basically if the market recovers above these previous structure highs, because we have a clear swing here, so there is nothing to search for. There's a clear first swing, a bounce, and then a new bounce, a new low to that Fibonacci retracement level. But then finally the market confirms a violation of these previous structure highs, or a recover above this price zone, and that will confirm, or at least in my opinion, and in my experience, that will confirm this was a false breakout below or a false violation of the previous structural lows. And as soon as I see that confirmation, so as soon as I see the price confirming, actually we only see that above these highs here. So basically the price recovers above this November 5, and then it stays there. So as soon as the price starts to validate this as a false violation of the previous structural lows, I will start to project the shark pattern here. Actually, I will start to project that pattern between the 161 and then later the 224% fib. So basically my first level of pressure will be the 161. I will expect a retracement from the golden Fibonacci level, and then actually the market has found some resistance a few points below that fib, and then it has retraced. So basically as soon as the price approaches these levels again, I tend to ignore if the price reacts very close to that Fibonacci first level. So then I will get focused on this second level if the market decides to approach that level again, or those variables and those criteria for the shark pattern. So basically I will pay attention at the very first time the market approaches that Fibonacci level. If the market feels that pattern, we have a short there. We have a possibility for shorts, limited, because we only expect 50% of the move of this swing high as a default target. So basically we only expect the market to retrace to the 50% Fibonacci level, because this swing, all these three swings will also form the 5-0 sequence at the 50% Fibonacci retracement level. Okay, so we have this previous structure. Actually, let me remove this line there. So we have a shark pattern there, but these very last three swings in blue, this will form the bullish 5-0 sequence. Let me remove some background here, and let me also. Okay, so basically the bearish shark pattern printed at the golden Fibonacci level will trade the 50% Fibonacci retracement, which may offer support for the bullish 5-0 sequence, which tends to offer more upside momentum in this case. So it's a limited short, it's a limited trade to the 50% fib, which in the same expected if the price decides to print that shark pattern at 224%. So 50% Fibonacci retracement expected, and we are approaching that Fibonacci retracement level, by the way. So initially I projected that pressure golden Fibonacci extension as a potential pressure level, and then as soon as we start to see the price not responding or not forming, actually not even forming that pattern at some point, we need to stay focused on another pressure level. And even if the price decides to print a pattern and fail, at some point we need to stay focused on the next process. We don't freeze just because the market has failed. So you need to move forward, and if you are a true believer of your technical approach, we need to stay loyal to those variables and those criteria. So basically, if the price fails you at some point, or if the pattern fails, we need to search for the next pressure price zone, because that's how the market behaves. So the market sometimes will correspond and will react accordingly to the default expectations, and sometimes you'll not. And we need to embrace those moments also. So moving forward, let's see how the cable will react from these levels. We are, as I said before, we are approaching that Fibonacci retracement level, which is the 50% Fibonacci level. Let's see how the price will react. We can start to project also. Let me draw here. We can start to project kind of bullish, internal bullish bat pattern. $88.6 eventually. Let's see how the market will react if the market decides to approach that weekly fractal. We are too far from that pattern, but also will depend the strength for the cable actually falling below that daily fractal support. The market has been falling very strong. So let's see how the market will react. We have also that possibility, and this may also, as always, actually it can print a crab pattern extended at 161. So basically for now it's nonsense to start to project this one. So we have the 88.6 as a potential bullish bat pattern above the weekly fractal. As I used to say, false breakout below 113% Fibonacci, a false breakout below the starting point of the pattern, alt bat pattern completion point. So we also need to take that into consideration, the range between the 88.6 and the 113% Fibonacci level, and then the extended crab pattern. As I said before, if the bat pattern fails you, just crab it, because the ratios, the criteria that we use, or the variables, the Fibonacci variables that we use to identify the bearish or the bullish bat pattern, then the market can extend to those Fibonacci levels. Basically, the 88.6 as a bat pattern can also can threat the violation of the previous structural lows or highs, in this case the previous structural lows. It can threat a violation of that fractal or that support level with the 113% Fibonacci extension level as a reference for that potential false breakout. If the market decides to push below that Fibonacci level, eventually we will see the market trading even lower. So basically it's too soon to project those patterns there. We should pay attention to that, to this 88.6 right above the weekly fractal. Actually we can tag that one already, 129.32. Let's observe how the market will react, but for now it's pure speculation. We need to see that approach to those levels, and then we will see what will happen. Okay, moving forward, euro versus dollar. Let me go into a weekly time frame. As you can see, at the same time the cable is trading that trend line resistance, in my opinion, euro dollar has already violated that trend line resistance, that descending trend line, and actually it has already consolidated above that trend line, above with a new weekly fractal, actually not above the monthly fractal. We are now threatening that confirmation above the weekly and the monthly fractal, but we have a new weekly support right at that trend line. So basically the market has violated that trend line. It has consolidated right above that structure with the new fractal support, and now we are threatening the violation of the weekly and monthly fractal. So basically we are also trading this golden Fibonacci extension level. I shared this before. The potential retracement from these levels will not be a surprise, but at some point the market it's already trading above those fractals, which I will not be surprised to see the market being pushed above. If the price approaches the previous highs from February 2018, we have also the bearish shark pattern at 224% Fibonacci extension, so it's a natural pressure zone, previous structure highs, and let's see how the market will react from there. And this is also the 38% Fibonacci retracement level from these previous highs from 2008. June to July, actually July 2008. So basically this is the 38% Fibonacci retracement from the previous structure highs to the most recent lows on a weekly chart. So I will not be surprised to see the euro versus dollar approaching those levels in a medium long term. For now, I still believe there's at least the possibility for a retest of this monthly and weekly fractal before major moves, without ignoring this kind of a bullish flag the market has printed here. So we expected some upside momentum. So I have already shorted the euro versus dollar. So I have my shorts position already right from the middle of this range, between the 161 224. I started to see the price finding some resistance, and I decided to push a trade in that direction of the pattern expectation. But nothing assures me the market will not be forced and be pushed to this specific Fibonacci level, the 224% Fib, since it has rejected the 160-on-8 extension as a first level of pressure. As you can see, it has been used as a support. In fact, the market has closed above this golden Fibonacci level, and it has, since then the market never recovers that level again. So basically, I will not be surprised to see euro versus dollar retracing back to those levels, back to 119. So this is a 38% Fibonacci retracement from all these swing highs. So let's say if I need to search for a minimum Fibonacci level for a retracement in this situation, I will search for the 38% Fib. So that may converge with one approach to the 200 moving average on a 4 hours time frame. So let's see if euro versus dollar will search for that Fib level again. But once you start to identify this as a bullish flag, obviously we start to project the price even higher. So fortunately for me, the price is starting to recover again in my direction. Let's see if the price will not recover again above this trend line, because if that happens, eventually we will see more upside momentum, and it will be a failure and a moving forward situation. So where the market will not correspond my expectations. So basically, on a lower time frame, let's say on a 4 hours time frame, there's room for more downside momentum. Actually, I can start to adjust this structure already. So let's see how the market will behave inside this range, or if we need to adjust this structure again. But if it keeps this structure, it will be good for me, because it may force the price to trade even lower. So let's see how the market will behave. So I'm expecting some eventually limited shorts for euro versus dollar, but on a long term, I will not be surprised to see, as I said before, more upside momentum. Australian dollar, 224% Fib, bearish shark pattern, 0.7555. So nice reaction from that Fibonacci level. Let's see how the market will react also. So the default expectation for that pattern, 72.81, 50% Fibonacci retracement level. Let's put there the 38% Fibonacci also above the daily fractal, but that pattern suggests the recovery of the monthly and the weekly fractal, the previous structure high. So I'm not so sure if the Australian dollar will present us with that deeper retracement. But that's what the pattern suggests. The pattern suggests a 50% Fibonacci retracement. So let's stay focused on that possibility, and without ignoring, obviously, the very first one, the 38% Fibonacci retracement level at 73.50, right above the daily fractal, the previous daily fractal resistance, in fact. So bearish crab pattern. Bearish shark pattern printed already for Australian dollar. versus dollar. The Kiwi very similar as euro versus dollar, but at this point already trading much higher and above, not only above that weekly and monthly fractal resistance, but also above this next zone. So this is a next zone for these inverted edge and shoulders. We have default targets for that pattern at 77.12. So I still expect that to happen. Obviously, we have already a daily fractal and a daily support, so we have a tiny range between the daily fractals already printed there. So basically, we wait for the market to correspond and to react to the default expectation for these inverted edge and shoulders. So I avoid to get involved on the Kiwi for the short side at this point. Australian dollar versus the New Zealand, we have also one higher degree bullish cipher pattern projected at 78.6, 102.18. So let's see how the market will react until there. 78.6, just below the most recent support level. Inverted edge and shoulders, default default target for that pattern at 106.80. But if you go into a lower time frame, you see that we have also one, we are trading actually above the bearish shark pattern completion point. So this was one of the suggestions that I shared among my subscribers, one of the trades that I pushed among others, or between other setups that I shared. Also, this was one of them. And as we can see, the market has invalidated that pattern already, and since then it has been it is using the 224% Fibonacci extension level and the completion point for that shark pattern as a support. So basically the market has found some pressure, very limited pressure there, new highs. I started to think, okay, new highs threatening my stops, and then the market starts to recover in my direction. But suddenly we have a very fast reaction above the previous structure highs, and then during overnight the market has decided to invalidate the pattern, and we are now using this level again as support. So I will not be surprised to see the default expectation for the inverted edge and shoulders being reached at some point. That's what it is. Sometimes we take a position that will fail, and that's what it is. So I will not be surprised to see that happen, or that happening. And let's project already that golden Fibonacci extension above and see where the price may find some pressure. Actually, another Fibonacci extension level, the golden Fibonacci level from this swing low, so offering nice resistance there. So basically this is also a major shark pattern. We can see this as a higher degree shark pattern right at my stop loss. I actually exactly nailing my stop loss over there. So I will not be surprised to see actually this minor shark pattern failing, but this higher degree reacting to that Fibonacci levels. I will not be surprised. To see that reaction. But since we are also trading above this channel, as you can see, since we're still trading outside this channel, I need to see also the recovery of that structure again. So if the price decides to enter again this, actually let's tag this as the previous structure or the most recent lows. If the price decides to trade below 106.06, basically the most recent support level, if the price decides to recover that will force the price to enter again, or to recover this descending structure channel, which may offer downside momentum. But since we are trading above it, I will not be surprised with the 224% Fibonacci extension being reached. Also, weekly fractal resistance, a retest of that fractal will not be a surprise again. So let's stay tuned on this one. Very tricky to trade if you decide to trade this trend line. So, and that was the point here. So I have this descending trend line resistance, and I went into a, let's say, actually it was, I shared this as a 1 hour time frame chart, kind of a small and limited short for that bearish shark pattern. And of course the market has found some pressure without at 106.06, without completing that sequence, that the expected bullish 5-0 sequence at the default target. So at some point we expected the market to offer another opportunity to go long. We short the market expecting the 50% Fibonacci to be reached as a target, but also knowing that will print the bullish 5-0 sequence. We need to be aware of that. So it's a very limited short, which should be used with a very limited stops. So that being said, this was just one of the examples that I shared among my subscribers, trying to engage this one. Of course, the market has invalidated the pattern, which will be considered as a failure. Moving forward, I believe the market has room also to trade even higher. As I said before, a retest of the weekly fractal will not be a surprise. CHF, another, let's go into a weekly time frame, and let me show you this. So I draw this kind of a channel, a descending channel between these lows, and I will draw that again just for you to understand how I draw that. So I target this previous structural low, and I extended the trend line support covering those previous structure closes. I'm talking about the close prices of this structure, and I projected that one above or at the previous structure close. So basically we are inside this kind of a descending channel, a parallel structure, bullish shark pattern 224, 86, 83, 78.6 right above. We are now threading the weekly and the monthly fractal, so I will not be surprised to see a nice reaction before moving even lower. So the market will not move always in the same direction. So that shark pattern may offer, as a natural pressure zone, may offer a nice bounce. And if that pattern gets formed, we expect then a major bounce from this Fibonacci level to the 38-50% Fibonacci retracement level again. So stay tuned on that possibility. Eventually we are forming kind of a round shape structure. I will draw this just as pure example as a potential cup and handle, or in this case an inverted cup and handle formation. So I will not be surprised to see a retest of the previous structural lows and being and then later another bounce from these lows, forming the handle, and then more downside momentum for CHF eventually. Let's see if euro versus dollar keeps trading higher. The inverted correlation with CHF is strong, so I believe that makes sense. A cup and handle, a bounce to form the handle at some point, and then more downside momentum, but one step after another. Don't rush. That's not granted. We don't know what will happen. It seems like a nice round shape between those lows, so let's see how the market will react. And actually we will also react accordingly to the patterns the market will form during that process. So if that is the next one that I need to get involved, or that I want to get involved, I will measure my targets. I will measure my limits. If I need to engage that trade, I will measure my initial position size, and I will trade that specific one if I need to, if I want to get involved. So let's see what will happen. For now, we are threatening also this kind of a support trend line for this descending channel. Let's observe how the market will react. But again, I will start to pay attention as soon as the price approaches 86.83. That is my price. The dollar versus the Canadian, I have already longs for this trade. This is also one of the suggestions that I pushed for my subscribers based on this bullish crab pattern printed at 168 extension. So I expect nothing more than 1.8% above my entry. 38% Fibonacci retracement, default target for the pattern 129.80. So this is the default target for dollar versus the Canadian. Norwegian krone, also with a bullish bat pattern printed at 88% Fibonacci retracement level. I shared this before with some of you, at least those who have checked my previous video. 88.6. So basically we expect some reaction from here. I expect the 38% Fibonacci retracement as a first target, which may also put the price converging with these 200 moving average approaching from above. If the price violates this monthly fractal, I believe the market will trade even lower. 802.75, bullish crab pattern extended at 168 extension. So if the price decides to confirm a violation of this monthly fractal, we should pay attention for more downside momentum, and then another pressure zone, in my point of view, very close to 8.0, that may offer another opportunity. For now, I still expect a nice reaction, at least to the 38% Fib. We are also trading, as I said before, the monthly fractal. So let's see. Mexican peso, another one that I have decided to share among my subscribers. The violation of this descending wedge, clear one. So I decided to trade based on the structure, not on any specific Fibonacci level. This is not an harmonic pattern. Obviously, this is just one descending wedge. So the way that I decided to take advantage from it, from the breakout of that as soon as the market confirms the violation of that wedge, I will target the previous structure highs. In this case, I will target these previous structure highs as a first target, and then later the previous structure weekly fractal support. It was broken at 20.84. So that corresponds to 4.2% in order to maximize my profits. As soon as I approach my first targets, I will break even my trade. My stops will be adjusted to my entry level, and as soon as the price, and if the price achieves my second target, I can activate a trailing stop, which basically will follow the price. If the price decides to trade even higher, and this is me just imagining the price rallying as if the world will end tomorrow, but if the price keeps trading higher, my stops will automatically follow that movement accordingly. So my default targets for the Mexican peso. Dollar versus the yen, I was expecting that bearish bat pattern on a 1 hour time frame. The market has found nice resistance at 78.6 and it has started to fall. So basically we are now trading below this most recent ascending trend line, below the 200 moving average again, and above the most recent 4 hours fractal support. At this point, I can't see nothing specific. I'm trying to see, because I'm saying that because eventually that this pattern makes no sense anymore, because the price has been pushed to these previous structure highs again, and at some point it makes no sense to project that pattern anymore. So at this point I have nothing to say to dollar versus the yen. Actually, a big range, not so big. We are on a lower time frame, 1 hour time frame chart, but the range between the daily fractal resistance and support levels, we need a clear, I need a clear move here for dollar versus yen. Nothing specific to say. Similar to euro versus yen, inside the consolidation, inside the moving sideways. But in this case, we have already completed that crab pattern at the golden fib. So I still expect the natural reaction to that pattern, which is nothing more than a fall to the 38% fib. So that requires the violation of the most recent support level. So we need to see one approach to that weekly resistance, so printed above. So we need to see if the price will retest that structure again, but that's the point for the crab pattern to retrace 38% Fibonacci level. Actually, I need to adjust this. I'm sorry. I need to adjust these to the crab pattern to the 38% Fibonacci level. That's what it is. 38% Fib for the pattern, not the previous structure lows. So this is the 38% Fibonacci retracement level from these previous structure lows and the right shoulder for these inverted edge and shoulders. So a retracement to the 38% Fibonacci level is a default target for this crab pattern printed above. Pound versus the yen. I was also expecting the formation of a bearish bat pattern, failed just by a couple of points, and this one I decided not to get involved. I could, because I started to see this nice bearish black candle engulfing the previous ones, and I started to see, okay, eventually it's a nice opportunity to try to go short, because I was aware that the market may sink even further. So, but that's what it is. At some point we will fail them, and we just watch and we just stay away and just seeing what's happening. Golden Fibonacci, let me go into a lower time frame, eventually a 2 hours time frame. Golden Fibonacci extension right there. Let's see how the market will react also from this Fibonacci level 136.76. Also very close to these edge and shoulders default projection, 200 Fibonacci level, 200% Fibonacci level, and that's what it is. We still seeing this as a potential pressure and support level, or potential support zone. So let's see how the market will react. 136.76 bullish shark pattern, and as always, we will not ignore. If the price decides to ignore this price zone, we will not be surprised to see a push to the 224% Fibonacci level, completing the shark pattern below. Australian dollar versus the yen. This is one of the survivals, at least until now. I decided to short this one and share this also with with some of the traders that subscribe to my services on Telegram. As some of you already know, I also shared some of those patterns with a small group of people, and usually I tend to share exactly what you see here, with a suggestion to go short for the Australian dollar with default targets and our limits already predefined. So basically this is my 2 cents for the Australian dollar versus the yen. I still expecting the market to react. Actually, basically all the yen pairs, I still believe there's a strong yen coming which may force all those yen pairs to sink. Obviously I can be wrong, and if the market will will decide that. If the market decides to invalidate those patterns, that will confirm that I was wrong. Until there, I'm trading just a pattern, and I'm just waiting for a default expectation for that pattern, applying a decent and friendly risk-reward approach to trade it. So nothing more, nothing strange on that. Rely on that pattern and use the default expectations that you have and respect those criteria. Another one, CAD versus yen. As you can see, I'm deeply shorting I'm deeply shorting, or in this case, I believe on a strong yen. So basically, also another one, CAD versus the Japanese yen. I have also targets positioned at 80.67, the default target for that setup. Euro versus the pound, and here we are. We have this double bottom at the weekly fractal, confirmed above these previous structure highs. We have a nice support zone and a nice, actually well supported by new daily fractal support and by the 200 moving average, and then a rally, not before printing this lower time frame bullish bat pattern at 88.6, being pushed to the starting point of the pattern, so the 88.6. But I believe the market closed right. Oops, no, not this one. The market has closed at 88.6, I believe. Exactly, we have the 88.6 as a bullish bat pattern completion point, a minor or lower degree structure here. As soon as you start to see the market falling, you can try to identify another pattern that will put you in the direction of the expected trend. Since the market has violated this descending channel, we can expect a bullish momentum to be established at some point. So this was only the first, actually the second, or let's consider this a very the first retracement after a major swing. Okay, I will consider this as a first swing. So basically we are trading the third wave at this point, and since it has been so strong and so impulsive, I believe that may turn into a 5-wave structure. Let's see how the market will react. At this point, we are trading the golden Fibonacci level, but also the 78.6. So I will expect a natural reaction from these Fibonacci levels, and taking into consideration the patterns printed there, or the pattern printed there, the crab pattern, golden Fibonacci already traded a few points above, so I need to adjust my targets to that same, to those highs. So I will put my targets at 90.89. So this is the default target for this crab pattern. 38% fib, eventually again searching for this very strong bullish momentum and searching for this 200 moving average approaching from below again. Euro versus Australian dollar. Euro versus Australian dollar, bearish, bullish bat pattern, 88.6 ignored, 113% Fibonacci extension, 160.83 also ignored, and a major one approach to the major to a major crab pattern projected at 168 extension. Actually, it's this one. So we are now approaching the golden Fibonacci. We are now, actually, the market has formed already a new support below, just a few points, or just a couple of points above the monthly fractal, and without completing that specific bullish crab pattern. So I will not be surprised to see the price approaching these levels again, or at some point, and if that happens, that may trigger that crab pattern. For now, we're still threatening the recovery of above that 113% fib, which may actually, let's say, if the price decides to recover above that weekly fractal support, we may see the price trading the default expectations for that alt bat pattern, which is the 38% fib. So if the price decides to recover above that weekly fractal, we may see the price trading very close to 161 or 161.8. Look at that golden fib right there. So stay tuned on that possibility, a recovery of the weekly fractal support. Euro versus the New Zealand, nothing to say at this point. We have this 224% Fibonacci level acting as a nice support for this kind of a triangle there. We have a small consolidation process or period there, and the violation of that structure forcing the price to react and forcing the price to trade even higher. So I projected this as a potential inverted edge and shoulders. Eventually we are forming the right shoulder, but I will not be surprised to see more downside momentum for Euro versus the New Zealand on a 4 hours time frame. If I need to start to project patterns below that daily and weekly fractal, man, this will be extremely aggressive. One of them, taking into consideration this very last swing high, an extension of that swing to the 161.8 extension. So that one is projected at below the previous structural lows, actually not below the previous, and actually below the previous structural lows from 2019. So this is the first one that I will pay attention. So this is kind of, this will be the crab pattern. But if I measure this retracement here, and this can depend, that this will depend on your broker. I'm using a Wanda to measure this retracement at this point. We may see other brokers without this wick so extended above the closes, so that may differ a few points, but the point is to search for this retracement after this swing. So we have a first swing high, the retracement, and then another bounce, and these ratios presented here only suggests one pattern, which is the butterfly pattern at the 127% Fibonacci level, which may put that pair trading, the Euro versus the New Zealand, trading even lower, 157.15. So this is a big butterfly pattern for at least in this time frame. If you start to increase your time frame, that will be more friendly for sure. But the ratios presented here, the 78.6 retracement, then a very small and tiny and shiny retracement, then that shiny bounce to the 38% fib. I believe the market did not cross to the 50% Fibonacci level. Let's measure that. 38% Fibonacci, refusing the 50%. Even if the market decides to approach that Fibonacci level, the 50%, we can consider the butterfly pattern. Of course, if the price starts to approach the golden Fibonacci level, that will change the projected pattern into a crab pattern again. Okay, that's not the case. I'm just using this as an example. Instead of a shiny retracement or a shiny bounce here to the 38% fib, or eventually the 50%, if the price starts to approach the golden fib and even higher, and then later starts to fall again as soon as the market violates these previous structural lows, we start to project that bullish crab pattern below. Now, since the price has respected this criteria at 38% Fibonacci level, we can use, instead of a golden Fibonacci level, we can use the 127 and project this as a potential butterfly at 157.15. So, but then later, if the market decides to keep trading even lower, we should pay attention again to this golden Fibonacci level again, because we can use the same ratios for the butterfly. If that butterfly fails and the price starts to approach that golden Fib, we should use also that Fibonacci extension level as a potential pressure level, because we are searching for an extension of this swing. And this very last swing high, the market tends to search for pressure at that Fibonacci level, the golden Fibonacci of the very last swing high. So that being said, that may differ from broker to broker. Owanda, as you can see, we have these large wicks above the close price. We have the close price at 191.78 and the higher highs of that candle at 199.31, so huge candles there. That may differ from broker to broker, which make difficult to measure, at least to find those ratios accordingly and to identify the patterns. But that being said, stay tuned to these criteria and to those variables. If the price decides, if Euro versus the New Zealand decides to break below this weekly and daily support, we will see the price approaching those levels, initially the 165.07 and then later eventually the 157.15 and ultimately 145.77. But one step after another, and eventually the market will search for all of them. Eventually the market will react to this golden Fibonacci, retest the previous structural lows, the weekly and daily fractal, and then it starts to fall again. It will find the 127 extension, natural pressure zone again, eventually another bounce. And if the market decides to keep trading in that direction, we may feel all of those levels and the price may react to all of them. Let's observe actually Euro versus New Zealand. Now, the pound versus the Australian dollar, I shared this as an inverted heads and shoulders. Actually, the heads and shoulders, not an inverted one. And I shared before, actually the market was forming the right shoulder, I believe. Then the market has violated this structure and it has retested the next zone. I draw this trend line here between those closes on a higher time frame, I believe, kind of a 4 hours time frame, between those closes, and the market has kind of retested that structure, that next zone, and then finally it has entered into a rally and falling into these previous monthly fractal support. So we are now threatening that monthly fractal. I projected this as a crab pattern at 161, but I also shared with a note saying attention to that monthly fractal. I will not be surprised to see the market ignoring that fib, and basically the strong momentum and the strong move here. When that happens, we should pay attention to that possibility for the market to ignore those Fibonacci levels. Actually, the market can ignore every pattern along the way, but well, the point is we are at least at this point starting to threat or creating one attempt to recover again that monthly fractal. So we have new lows below that fractal. So, and as we can see on a 4 hours time frame, and if you go into a lower time frame, let's see how the market will react here. So I believe if the market recovers that monthly fractal and settles above it, maybe it will form an ascending structure with, well, I'm not saying the market will trade those default targets. So basically I need to adjust it to the 38% fib, but I will not be surprised to see, as a natural reaction, a violation of the daily fractal support turned into a resistance and the market being forced to retest those lows again, and then later a threat to the monthly fractal again and eventually new lows. But for now, we're still threatening that monthly fractal and taking into consideration this crab pattern printed there. We may see the price reacting after threatening that monthly fractal support. Let's see how it will develop. Edge and shoulders reacting very well, actually achieving the default targets already positioned at 177.33. So this was the default target for that edge and shoulders printed above. Pound versus the New Zealand. The strong of the Kiwi may also influence, obviously, the pound versus the Kiwi, the New Zealand. Let's see if the price will confirm my default projection at 182.16, 168 extension, another deep crab pattern. And why it's a deep crab pattern? Because we have this deep retracement here. Okay, we have at least the market has respected the previous structural lows and the starting point of the pattern. It has been pushed to the 88.6 Fibonacci retracement, another bounce, and then finally, if the price decides to approach that level, we should pay attention. Another bounce should be expected based on the natural reaction for the pattern. So we expect a 38% Fibonacci retracement to be reached from there. The Dixie, let me show you my 12 hours time frame chart. I shared before among our communities the bullish cipher pattern on a higher degree scale or higher time frame. Let's say the bullish cipher pattern 9140 that was projected a few months ago. That's still valid. So this is a kind of a daily or kind of a weekly, actually we can see this almost as a weekly time frame chart, and that only invalidates below the monthly support. So that bullish cipher pattern, if the price decides to trade below that monthly support, it will invalidate, and during that process we should search for opportunities to go long inside this between that completion point at least in the monthly fractal. So inside this big range we can try to search for nice reactions for the Dixie. Let's see how it will act from here, since we are also expecting more long-term bullish momentum for euro versus dollar. At some point we may see a retest of that monthly fractal, or at least one approach to this to the 88.6 position at 89.90. So let's go into a lower time frame again, 4 hours time frame. So this is the major bullish cipher pattern projected before at 91.40. So but we are also approaching a minor or a lower degree bullish crab pattern. So the pattern was projected at the golden Fibonacci extension level. Actually that's the price for the crab pattern right there, and I will not be surprised to see this crab pattern offering a major reaction, since we are also trading very close to the bullish cipher pattern completion point without invalidating the pattern below that monthly fractal support that I showed you before. So if the market keeps respecting that fractal, that major fractal, a reaction from this bullish crab pattern completion point may also force the price to react to this major bullish cipher pattern. So let's wait for that pattern, for that minor crab pattern to complete. Now we have also, I shared this on a lower time frame for gold and for silver, and I said heads and shoulders, you trade them or you fade them. And the reason why I say that, because there will be times where it makes more sense to fade that next zone instead of waiting for a short that will never happen. And I'm not saying this is the best example, but I believe it makes sense to use that theory at some point for gold and silver, specifically taking into consideration the most recent price reaction. So basically we still inside this major kind of a descending channel, and we have this trend line resistance marking this most recent or minor or lower degree momentum violated already, so the price has already violated that structure, that momentum, so and it has started to create this ascending momentum again. So obviously we should trade that heads and shoulders if triggered. If the market decides to violate that daily fractal, we may see gold trading below, approaching the default target, approaching the previous structure lows. Note that we are talking on a lower time frame for gold. But that can happen. The market can sink into those levels, 200% Fibonacci extension level as a default target for the pattern. That will also complete the cipher pattern at 78.6. So we have a decent and perfect convergence between both the default target for the heads and shoulders and the eventual bullish cipher pattern. So if that happens, will not only offer me a short, but will also offer me a buy opportunity again. But at some point, as I was saying, it makes more sense to search for, instead of searching for a short and waiting for the violation of that next zone, which may happen, which can happen later, and we can take advantage of that information later, or that behavior later. But at some point, it makes more sense to try to fade with the next zone. And the reason why I'm calling your attention to that possibility is because we have bullish hidden divergence suggesting more upside momentum for gold above the 200 moving average. So what we have at this point is RSI printing new lows below the previous structure in fractal, daily fractal support, in fact, on price. So we have the price printing these lows, new highs, and then a fast pullback, oversold below the previous structural lows. So we have signs of bullish hidden divergence suggesting upside momentum. We have the market has already offered that swing. The market reacted to that bullish hidden divergence already, forming that potential right shoulder, as I shared, as a potential inverted, as a potential heads and shoulders formation. But based on that hidden divergence, we may also expect at least a retest of the previous structure and most recent highs, in this case the daily fractal. I can expect for that based on this retracement supported by this bullish hidden divergence. So that suggests more upside momentum for gold, without ignoring obviously the violation of the daily fractal. It's obvious if the market decides to trade below, it will trigger that heads and shoulders formation. The same for silver. Silver also trading above the 200 moving average. But in this case, actually, silver didn't offer bullish divergence, bullish hidden divergence. We have a clear structure for silver also. Nice support. In fact, RSI also offering nice structure here. No divergence between the most recent lows and the previous one, and even with the daily fractal support, there is no divergence, which may guide us into another major structure. So basically, I will not be surprised to see this as a kind of a megaphone, and you will see eventually the price trading even above that daily fractal for silver. Okay, so this of course for silver it's not the best example, but at least for gold we have that bullish hidden divergence suggesting more, creating kind of a signal for more upside momentum for now, not for medium term or for long term. Obviously this is a very lower time frame chart, so this is a 1 hour time frame chart, so we can expect that reaction. The market has reacted to that bullish hidden divergence, and we can expect at least a retest of the previous highs, as I said before, but nothing is granted. The market can fail, and if that happens, we already be aware. We are already aware of the possibility to trigger that head and shoulders. Okay, so that's the point here. The silver, it wasn't the best example in terms of bullish divergence, at least on this time frame. Let me check the. Actually, we have on a higher time frame, on a 2 hours time frame, which is even better. We have that bullish divergence between the lows for silver and the previous daily fractal, the most recent lows and the previous daily fractal support. So I will not be surprised to see that. In the same way, the same methodology I will apply here. If the market decides to trigger that daily fractal support, we may see silver printing not the cipher pattern, but searching for that golden Fibonacci extension level, printing the bullish shark pattern actually right below the default completion point for the default target for the head and shoulders formation. So that's what it is. Now, this is crude oil, or West Texas oil, and I was expecting a deeper retracement for crude. It's not impossible to happen, but at this point, with the market being with the Canadian also being so heavy, I will not be surprised to see more upside for crude oil. At this point, I will say, if the market decides to recover again below these most recent fractal support at 44.85, I will dare to think the market will trade even lower. At this point, this pattern makes no sense anymore, unless if the price decides to respect these ratios, which may put the price trading even lower. So basically, if the price decides to use these highs as a false breakout above, we can try to use these as a minor shark pattern projected at 41.31, but that we need to see as that's the reason why I was saying below 44.85 I will start to see we may see the price falling even harder if that happens. But until then, and for now, I prefer to stay away for one attempt to go short crude oil at this point. SPX 500, I also one of the other pairs, or the other instrument, actually not a pair, the instrument that I shared among my subscribers to try a short for these head and shoulders. So basically, we have default targets for that head and shoulders for SPX 500 at 36.09. So that's my default expectation for that pattern. The DAX extremely productive, let's say, with we have an inverted head and shoulders here, with the left shoulder, the head, and the right shoulder. I shared these before the breakout above the next zone, and then also shared the default target for the inverted head and shoulders and the bearish shark pattern projected at 13.41. So basically, the default target for the inverted head and shoulders also converging with this bearish shark pattern and offering this amazing short opportunity for those who are searching for that. Also a trade that I took for myself, so I shared also with my subscribers the possibility to short the DAX. So that's one of the trades there. Not this one. I shorted that the DAX before that pattern. We were already positioned on this short side momentum for the DAX. This is the Bund, now approaching 178.76, projected as a bearish crab pattern, 168 extension. Let's see also how the market will react. Let's see if the market will recover that monthly fractal resistance again. Bund and bond. And I will take some time actually before going into this bond. Let me share also my views for Bitcoin and Ethereum, because I will finish with that setup that I want to share with you for the bond. Daily charts, Bitcoin, bearish shark pattern. I'm still waiting for that major and deeper retracement, at least to the 38% fib, 1379 if you wish, 38% Fibonacci retracement level, and then later the 50% fib a few points below. Daily chart for Bitcoin and Ethereum, not so higher time frame, you can go into a lower time frame. Also bearish crab pattern. Note that one has already traded the default targets, and this is the crab, so this is not correct. Usually the crab pattern will search for the 38% fib, and that's what I was saying. Note that the crab pattern was printed here, and it has already achieved the default expectations at the 38% Fibonacci retracement. So basically then we have a new high. So if this acts as a false breakout above, we may see, as always, and following the same methodology, we have a false breakout above, project that last swing high below, and search for the golden Fibonacci extension. So basically we have kind of a potential bullish shark pattern projected at 389. Let me type this one, 388.94. So, but obviously this is pure speculation. The pattern formation, the probability for that pattern to form will only increase with the violation or the recovery, in this case, of the weekly resistance. Previous weekly resistance turned into a support. So which means if the price decides to break below that weekly fractal and that previous structure support and recovering that weekly fractal resistance, we may start to project, we should start to project that pattern below. Until there, we don't know if this is a false breakout yet. We need to prove, we need to confirm that, and we only confirm that as soon as the price trades below this previous structure support or previous structure lows. That will confirm this as a false breakout. Until there, the market can rally above that daily fractal and keep moving higher. We don't know if that will happen. This can be just a corrective momentum, and it can be pushed to the previous structure lows without breaking them, and then new highs. Okay, so until there we need to wait. A violation of the weekly, actually the recovery of the weekly resistance will confirm this as a false breakout, and we will search for an extension of this swing projected below. Okay, that's the point here. False breakout followed by an extension, bullish shark pattern, and as always, bullish shark pattern, bearish 5-0 sequence at 50% fib, which may offer more downside. It makes part of the sequence. If the price prints you the shark pattern at 161, we have default targets for that pattern at 50% fib, and that will form the bearish 5-0 sequence at 50% Fibonacci level. We expect the price to react from that Fibonacci and against the direction of the bullish shark pattern. So the pattern is bullish, bearish, crab pattern. The pattern is bearish, bullish, 5-0. Actually, not 5. Actually, bullish 5. That was correct. Bullish shark pattern, bearish 5-0. Bearish shark pattern, bullish 5-0. That's correct. So I want to finish today with one specific chart and one very specific setup, and I want to share with you some of those variables and the criterias and what I search for in order to identify that specific market behavior or that specific pattern. So I'm talking about the bullish or the bearish 2618 trade setup. The 2618 trade setup is basically a double bottom or a double top, so that's the 20. So the 2618 double top or double bottom followed by the retracement to the golden 618% Fibonacci level. So basically, in using this chart, let me try to share this before the violation of the next zone, and where is it? It's here. Okay. So at this point we have a clear double bottom here, not only this major one which is not triggered yet, so we need to see the price trading above that weekly resistance in order to confirm this as a potential double top, which I tend to ignore because the shape is not correct. I like V shapes between double tops and double bottoms. I tend to consider this as a potential cup, and the handle being formed, the later we will see more downside momentum. But what I want to share with you is this concept and this specific setup, the bullish 2618 trade setups. As you can see, I shared these as soon as the price finds support at the golden Fibonacci level. And the pattern, to interpret the pattern, is very simple. First of all, we need to identify, let's go into a higher time frame, 2 hours time frame. We need to identify that technical double top or technical double bottom. In this case, we used a technical double bottom there, with the second low retesting the closes of the first one and rejecting to close below, and then the validation of this double bottom with the breakout of the next zone. As you can see, I use the close prices of the structure. Okay, we have the close prices of the first bottom being rejected from the second bottom here, and then a confirmation above that close price. So I need to see one candle completely above. What I say when I say completely is opening and closing above that close price of the next zone, in order to validate that pattern as a potential market reversal behavior. So a double top is already a reversal behavior. We can take advantage of that pattern just because it is a reversal behavior. As soon as the market confirms and validates the pattern, which means as soon as the price closes above, we can assume the price will trade even higher. But we are not, we should not, let's say, subject ourselves to this retracement, because we know the price will retest the next zone. We know the price at some point will find resistance and will retest that next zone. Sometimes it will not happen and the market will target immediately the default targets for the pattern, but usually the market will break the next zone and then will retest the next zone. We never know where the market will find that resistance. What we need is a close. We need a candle closing above to validate that pattern. So in that confirms me that the price needs to reverse the most recent market trend. So the market is trending bearish, so I will expect that double bottom to reverse with that momentum. So that being said, we have our confirmation here, and we have also the retracement back to the golden Fibonacci level, which means we have the bullish 2618 trade setup. 2618, the 2 for the double bottom and the 618 for the retracement, of course. So basically we project a symmetrical ABCD pattern, which can be formed beyond those default projections. We can use also the default 127% Fibonacci to identify that default variable for the ABCD pattern, which tends to be synced with that default symmetrical projection if there's a bounce from the golden fib, so it makes perfect symmetry, the 127. We can use that default projection, so the 127% Fibonacci level as a default target for the bullish 2618, but nothing assures the market will not trade far beyond those levels, eventually achieving levels that you never seen before, 241, 261. It's not the first time that we will see 224, the bullish 2618 forcing the price into a rally into those extension levels. So of course, a step-by-step initial target symmetrical projection. We have also a bearish shark pattern completion point, a minor shark pattern there at 138.07. So this is also the golden Fibonacci extension of this very last swing low. Okay, this very last swing low projected above. And we expect, as I said before, the 50% fib, a retracement back to the 50%, and then 5.0 again. That's why I will not be surprised to see the price trading even higher. Okay. Of course, there's a trend line resistance approaching from above, for at least this most recent trend line, covering those highs, which may put some pressure. That's why I'm projecting that shark pattern there, because I think the market may find some pressure there, which may force the pattern to work. And well, we will target limited shorts, correct? Limited shorts. We never know if that short will put you in the direction of the major trend. We don't know if that bullish 5.0 will work later. Actually, we don't know even if the price will complete the pattern, and we don't know the outcome of the pattern. So basically, we can try to take advantage from the default expectations, but we never know if the price will sink beyond those default targets, okay, and if the pattern will invalidate also. So we don't know that, but it is possible to find a shark pattern and then the price to ignore the bullish 5.0 sequence, and that will put you in the direction, in this case it will put you in the direction of a major trend, and we can manage our trade accordingly if that happens. Okay, so what's the point here is to see more upside momentum, and obviously to call your attention to this sequence between after a double top or a double bottom being confirmed. So we wait for a confirmation of the double bottom with a violation of the next zone. We wait for the retracement. We set our stops positioned below the double bottom, because we know if the price decides to trade below that weekly and daily fractal in this situation, it will invalidate the double bottom, so no longer a reversal behavior. The price is already trading below that structure, so it makes no sense to consider that price structure as a market, as a potential price reversal behavior. So we need to jump out immediately as soon as the price trades just a few points below that fractal. We need to jump out from this trade. So I want to call your attention to this setup. I shared that one on Twitter. If you have my Twitter, you can check that pattern that I shared right there. So expecting this same reaction. So I want to finish today with this pattern that allows you to take this weekend to search for those events on previous historical data. You can go back and try to search for a technical double bottom or a technical double bottom and double top, and search for that retracement back to the golden fib, and observe what the market has done before, and try to apply then later in a real chart, and and as I suggest, always try that on a demo account, of course, and then when you get synced with the process, you can go into a live chart and into a real account and try to apply your risk strategy to trade them. So I want to share this specific setup with you today. I hope you enjoy this sequence of events, and I hope also you take some useful information from here. So have a nice and wonderful weekend, everyone. All the best for you and for your families, especially if you have kids during this COVID situation. It's always great to have our kids around us and try to enjoy their presence, because they will not be kids forever. And at least my daughter with 9 years old, it's always a pleasure to have her around me, and it's what makes me move forward. No, it's our kids. Nothing better than a child or a daughter or a son to motivate us to do things and to do other things. And it's one of the most grateful things that I have in my life, and that I believe it makes sense for some of you who have kids. It makes sense. So have a nice and wonderful weekend among your families. All the best for all of them, and have a nice and see you the next week. All the best for you.